Let's welcome in Tom Lee now. FundStrat's head of research and a CNBC contributor with us, as you see, at Post 9. Welcome. It's good to see you.
Great to see you.
Let's hit tech first. Should we be surprised at this resurgence, this melt-up? And it's maybe caught some people by surprise.
I think investors should realize 2024 has been a year of surprising strength. The market has avoided so many opportunities for weakness. And now we're entering the final weeks of the year where we know there's still $7 trillion of cash on the sidelines and quite good visibility in next year. So I think stocks should finish very strong.
Why do you think money is going to the mega caps now in the manner that it is? Up 1.75% today, the NASDAQ up almost 4% over a month, and able to achieve this milestone.
One reason is mega caps have been leading. So it's sort of what people reach into the shelf when they're risk on. But second, we know that when interest rates fall, the mega caps actually are very sensitive to that. And I think today was a day where the odds of a December cut increased. You know, the probabilities are now solidified. And that's actually bullish for tech.
Because the CPI was, you know, some would say sticky, but it was largely in line. Is that how you read it?
Yeah, that's right. And I think it's allowing the CPI print today allows people to imagine a path to 2% because shelter now is cooling to a level that's in line. Auto insurance, which was at 25% earlier this year, year over year, is now down to 13%. So the two biggest contributors to CPI are in a downshift. I don't think the fact that used cars are going up is going to reverse the Fed's view. I don't think the Fed's going to tighten because used car prices are up.
All right, so Fed's cutting next week. That's your base case?
Yes.
And then what happens after that? All bets are off? Wait and see? What do you think?
I think the Fed put remains in play because neutral is, let's say, 2.5% to 3%. We're at 4.5% after the December cut. So we know the Fed's in a cutting cycle. I actually think the best case is for the Fed to do the fewest number of cuts next year.
That means the economy is pretty strong.
That's right. It's strong. They're not harming the economy by keeping rates here. And the labor market is holding up, and now we have a lot of firepower for future cuts, which support stocks.
Okay, you talk about a Fed put. You also talk about another put, and that's a Trump put.
Yes.
He's going to be here tomorrow, by the way, ringing the opening bell. People are excited about that down here for sure. But you say that that is a substantial part of your outlook for the new year. The Trump put, explain.
The Trump put is, on the simplest level, it is a White House that is going to measure its success by how the stock market performs. But it's also a president that's coming into a second term, but with a lot of previous experience. So this is a cabinet that has good private sector acceptance and I think very markets friendly. Overall, I think investors who might have been cautious for the last few years now want to be risk on next year.
All right. So your outlook to me is interesting, the way you sort of game out where the S&P can go, because you say we're going to 7,000 by mid-year, which sounds amazing because most targets that I've seen are 7,000 at the top end for the entire year. Your full year forecast, though, is 6,600. Why?
Part of it's cyclical. We're coming off two back-to-back 20% years, and there are 5 precedents to look at. 5 of the 5 precedents since 1880 had a weaker second half. So I'd say that's the base case. The reason I think markets do better in the first half is that there is going to be a lot of enthusiasm about a new White House, some of the headlines that come, whether it's deregulation, et cetera. And we know there's still a ton of cash and a lot of low leverage on the sidelines. That's why stocks can rally. And by the way, 11% in a few months, we've seen that routinely the last couple of years. But in the second half, I think markets start to worry about the larger macro risks like the Middle East, the potential risks of tariff and executing that, and potentially the fact that Doge could be so successful that it could slow the economy.
You're worried about being too efficient, cutting too much, and what the impact is going to be?
Yes.
Valued highly on the stock market due to their extraordinary gains, Nvidia, with its cutting-edge technologies and strategic foresight, has seen a meteoric rise of approximately 900% since the dawn of 2023. This jaw-dropping surge prompts the tantalizing question on every financial expert's mind. Can Nvidia sustain this momentum to achieve another blockbuster year in 2025? Speculation is rife, particularly regarding their significant contributions to artificial intelligence advancements through their GPUs. Industry leaders such as Meta, Microsoft, and Amazon continue to signal towards further collaborative growth, reviving memories of past successful endeavors. The looming question is, will 2025 be the year that solidifies Nvidia's position as the #1 AI stock? As investors hold their breath, the financial atmosphere is charged with anticipation and intrigue. Welcome back, everyone, to Investocracy.
Just distilling what you said before, Grasso, you're choosing IBM over Google. You're choosing IBM over Nvidia.
Well, I think Nvidia, right? So Nvidia's top clients are its top competitors. So that the writing on the wall is there. Not that I don't think it can go higher, but I think that it's probably run its course right now and needs to pull back.
Thank you. I'll ask you this question then on the back of that. Who should be worried about this? I saw in your notes, probably not Nvidia, not AMD yet, but somebody has to be.
Yeah, I think, there's some of the other quantum companies. There's private companies on that side, but I think on the public side, the worries are probably, because this is so far away. I think the piece that the rest of the Mag 7 needs to be contemplating here, and NVIDIA needs to be thinking about, is just what are they doing to have some sort of position within quantum computing. It's theory right now, but I think you have to pursue that theory, similar to when aviation was theory before we got flight. I mean, all of these things go from projects from the lab. And so I would say the potential losers are the companies that aren't doing that. And I think Google is standing alone right now within the Mag 7 in terms of their investments in quantum.
So you said 10 years away from commercialization, and what do you think commercialization could be? What is the field that could benefit the most from quantum computing?
I think it's as simple as AI. I mean, just the pure, you went through the numbers, basically going from an eternity to 5 minutes. I mean, it's hard. This is the kind of stuff, it's called superposition. It's hard for me to wrap my mind around the improvements in compute speed. And so I think probably the biggest beneficiary is just everything that's AI. I mean, ultimately, you have a company like Nvidia. If quantum moves from theory to actually a production product, they need to have an answer down the road. And so the question, who's going to be impacted? What's the use cases on these? I think AI is probably front and center, and within AI, probably healthcare is one of the biggest initial areas.
With financial analysts assembling like eager detectives, notebooks, and calculators in hand, Nvidia is squarely in the limelight. Known for crafting groundbreaking GPUs and the unmatched power of CUDA software, Nvidia has positioned itself as a pivotal player in the rapidly transforming universe of artificial intelligence. The demand surges intensely, like a rocket fueled and blazing across the sector, with GPUs executing parallel calculations at dizzying speeds, just what is needed for AI model training. Giants such as Meta are indicating an approaching significant acceleration in infrastructure expense growth, setting Nvidia up for another potentially stellar year.
It's Nvidia that's been talking about agentics, as well as Salesforce.com. And Nvidia stock is truly under attack from the sellers. It's been besieged for days now, down over $10 after a 4-day losing streak, with the damage getting worse when the People's Republic of China announced it's investigating Nvidia for monopolistic behavior. I thought that might come to an end last night when Taiwan Semi, the manufacturer of Nvidia chips, reported November revenue up an astounding 34%. And by the way, it looked for a moment like it would. But then the king of semiconductor engineering started a hideous rollover, one that spared no prisoners for anything related to the semis. Taiwan Semi closed down $7.23, or 3.6%. Brutal. Nvidia fell $3.74, down 2.69%. What crushed the group, really? All right, there's a lot of shadow boxing here, but the proximate cause was the plummet in Oracle, which wants to be the biggest builder of data centers worldwide. Frankly, I thought the numbers were good, and don't let anyone tell you otherwise. CEO Safra Catz stunned us right from the front, right from the get-go, saying that she expected cloud revenue, a spec not that long ago, should reach $25 billion this fiscal year. That's staggering, people. The rest of the call was all about the insatiable demand for more data centers and how Oracle can't build them fast enough. Larry Ellison, the revered chairman of the board and chief technical officer, told a story about how Oracle can build data centers faster and cheaper than anyone else on the planet, and they don't burn as hot. I was blown away when Ellison said, I quote, "We just extended our AI performance advantage by delivering the largest and fastest AI supercomputer in the world, scaling up to 65,000 NVIDIA H200 GPUs," end quote. Think of it. We've got NVIDIA, we have supercomputers, we have demand, and then demand, and we have an amazing company, Oracle, that simply can't meet the demand. There's a reason 4 out of 6 analysts on the conference call offered effusive congratulations. That's the greatest endorsement they can give. But it was all for naught. Oracle stock got clocked from the moment the numbers printed, and it kept going lower and lower and lower because not every line was a blowout. More on that later, but most were, some not. And given the stock was up 80% for the year before last night's report, we needed to see absolute perfection, and we didn't get it. Oracle's swan dive splashed red ink all over the fellow travelers. That's Dell, that's HP Enterprise, that's Supermicro. Ugly.
The continuous heavy investments in AI infrastructure by tech behemoths like Meta, Microsoft, and Amazon emphasize an unyielding drive and opportunity for Nvidia to sustain its leadership role. Still, some skeptics raise a cautionary note, pondering whether the potential growth slated for 2025 is already factored into the current stock price. An in-depth analysis of Nvidia's financials exposes a stout one-year forward price-to-earnings ratio, while Wall Street analysts predict revenue growth exceeding 50%, driven by Nvidia's next-gen infrastructure, aptly named Blackwell. This anticipated leap suggests a continued boom, backed by evolving upgrade trends that may extend beyond 2025. Investors, however, should remain pragmatic and temper expectations. The tremendous returns witnessed in 2023 and 2024 might not replicate perfectly. Nevertheless, a modest double-digit gain is still on the horizon, and Nvidia is poised to outperform market averages once more. This reflects not only a stable investment in AI progression, but also a testament to its ongoing market dominance and innovation. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Why have you fallen out of love with Nvidia?
So we haven't fallen out of love with Nvidia. We still love Nvidia, but our one concern is its recent price action. I would argue that Nvidia is going to dictate whether or not we have a Santa Claus rally or not. It is still one of our largest holdings, but it's broken the 50-day. Now, we do think that it will ultimately break back through and get to new highs as we go into January. But if Nvidia breaks, it will take the rest of the market down with it. That's one of the problems when you have a name that's so highly concentrated and highly owned. But right now, we would be buying this dip in Nvidia, but being a very short leash if it does continue weakness. But you can't have Nvidia not rally and have the market rally. That, in our opinion, I don't think that's going to happen.
Okay, looking at the movers, let's start with Nvidia.
Some news out of the Supreme Court on Nvidia. So Nvidia was sued by shareholders for misrepresenting their reliance on cryptocurrency mining. Nvidia appealed that. The Supreme Court today, in a one-sentence opinion, said the case should not have been taken up, but the practical effect of that decision and their wording means it can proceed.
In closing this captivating narrative, it stands out that Nvidia holds a compelling promise for the future. While 2025 might not mimic the phenomenal gains of the previous years, Nvidia's commanding presence in AI and computational excellence underscores its allure to investors with an eye on the years ahead. Projections continue to point towards a reassuringly steady growth pattern, securing its position as a powerful player in the AI stock market landscape. With Nvidia's relentless pursuit of cutting-edge technology and strategic alliances, it is well positioned to retain its market-leading status. Nvidia's journey within the realm of AI is a tale rich with potential and assurance, poised on the brink of yet another enriching chapter. The baton now passes to you. What is your perspective on Nvidia's path forward? Is it destined to ascend even higher heights, or could it face turbulent winds? Regardless of your view, one thing remains unequivocally certain. Nvidia is far from being a mere name on the stock ticker. It is a continuously evolving narrative, one that merits close observation and keen interest. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.